Yeah, so what's good, everyone? I want us to go through some trades that I took in the course of last week and this week. And you know that we do go straight to the point from how we took our trades before and after and whatnot. So we took our first trade was Aussie dollar, and this is what we did on the price action. So we took let me delete this one. So we went to our weekly time frame and we realized that we were on a very, very, very beautiful lowest low that apparently happened in 2022 October. Okay, so for the rest of the months and whatnot, we found ourselves above this particular buys here. So once we came to these lows here after breaking this beautiful trend line, as you can see here, we dropped down to the daily time frame, marked our zone on the weekly. As you can see, this is our zone on the weekly. Okay, this is our zone on the weekly. We went down after this beautiful rally of the cells. We broke. We've been breaking all these support areas, as you can see here. So we finally got to the lowest low, and on the daily time frame, what the market did is that it gave us a head and shoulder structure. Head and shoulder structures are very common in the currency market, so you keep watch for them. So after this beautiful shoulder here, the market impulsed down to continue with the sales, then broke in with the daily time frame, as you can see. So we had a very beautiful break-in. This one here, this is a break-in here. Let me enlighten this one. So we got a very beautiful break-in on the daily time frame with this candle. So after seeing that, we went again to the lower time frame, and on the lower time frame we observed the break in here. Then we saw that people tried to continue with the sales on this particular zone here. So we had people trying to continue with the lower lows, as you know how they form, but unfortunately it failed and we had a beautiful breaking of the structure. So the market did a good retest. Then for a while we consolidated. So this is where we took our first trade. You can see here after the H4 breakout retest with our stop loss below to give room. Always give your trades room to play out. Yeah, you don't have to have a very, very tight stop loss just to improve your risk reward ratio. It is of no use if you keep getting tagged out. Every time you're tagged out, then after a few hours or a few days, the market heads to your direction. It is useless. Okay, so we had a very conservative stop loss of risk reward ratio of 2, as you can see, which is still okay. So long as you're able to keep up to that with a 50% winning ratio, then you'll be on top. So the market played. We had a very beautiful rally, as you can see. Then almost immediately the market headed down again. So it required a lot of patience. Up, down, up, then almost came to our stop loss. Okay, so this is where the beauty of having a good stop loss to give room for play is important. Then almost immediately, now assuming if we had our stop loss as they always suggest in the textbooks, that just below your lowest zone or just to the next to the lowest zone, we would have been tagged out. Okay, but having it as huge, and I'm not encouraging for huge stop losses, but as conservative as this, the market did what it did, came and played around here. If you want, you can always add as an entry here. Then you can see the rally that the market took with us, and we managed to hit our 1:2 risk reward ratio, and that was the Aussie dollar. So this is the screenshot of the Aussie dollar. So this is where we took the trade. Let me just zoom it in for us. So that is where we took the trade, as you can see. Then the aftermath, this is the aftermath. All right. So there it is. You be patient. We held it for a couple of, if not days, we held it for a couple of, what do we call it? For a couple of hours, 4 hours for around, maybe if we can measure, we held it for almost 2 days. Okay, so patience is key in this game. So I'll move straight. We don't want to waste time with dealing with the most important details. The next trade that we took, we missed. In fact, we missed this one yesterday. The euro dollar. So on the euro dollar, we were supposed to, as you can see on the weekly time frame, I love doing the weekly because on the monthly time frame, sometimes I get lost. So I prefer the weekly because the candles are still in good shape for me and they are standardized for that matter. So as you can see, above we buy, below we sell. We had a reaction here of sellers that failed after forming a whole weekly candle, bearish candle, as you can see. Then we tagged here and made a rally. Remember, these are weekly, so we had a 2 week, 3 week above this area. So it was a strong, strong area. Then when you drop down to your daily time frame, we were able to see that we have a very, very good. Remember, our areas of value should have at least 3 to 4 solid touches. And when I say solid touches, these touches should be above at least the daily and the weekly, maybe the monthly at some point. Okay, but weekly and daily works it for me because if a zone is tagged or tapped 1, 2, 3 times, okay, and it has reacted on the same zone, that simply means that that area of value or that particular price is very strong for that matter. So we took buys. There were buys here above they bought. You can see below when you go to the H4, you realize that there was a H4 close here and a retest that proceeded to these cells, then tagged again. So this already has qualified as our area of value. So I'll stick to what we are seeing currently right now. So we also have this beautiful area above they bought for days. Okay, then we had a beautiful breakout, retest, sell, 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 and currently we're on these highs. So what do you expect from that highs? We definitely expect sales. That is if they'll hold. Okay, so when you drop to the H4, this is our favorite time frame for taking entries. We came down here and related this market to what happened previously here. As you can see, we had a beautiful breakout and an immediate retest to this zone for a TP of here. Okay, so we were supposed to place our pending orders somewhere around here so that we may be tagged by this candle. Let me just pull that aside so that we may be tagged by this candle. But unfortunately, I got carried away with some activities and failed to place my entry with a stop loss here. So we were supposed to make this trade a very quick 2.2 risk reward ratio. Okay, but that is it. With some trades you'll catch, some trades you'll miss, and you move forward to the next. So not much ado on the euro USD currency. Okay, so let's move as we are waiting. Currently we are waiting for a break of structure here so that we may get this great, you can see almost a 1:3. We break, retest, and we will rally to the upside with those entries. So the next one should be the U-Chef. Okay, U-Chef, we actually managed to exit yesterday. So weekly again, we do the weekly time frame. I want to keep the video as short as possible, as we always do. We could keep them short and sweet to avoid a lot of detailed information. So on the U-Chef, as you can see, we are having a very great reactive zone here on the resistance area. So this is a support, touch 1, we broke and made a retest, touch 2, we sold for weeks if not months. Then we still held this, the buys came in for a couple of weeks and months, I guess. Then another sell, another sell, another sell, and currently look at where we're coming from. So what do you expect from here? A good number of sells that are most often than not will equate to what happened previously, because what the market does is that it repeats the same prints as it did previously, and it's as simple as that. Okay, so when you drop down to the daily time frame, now we've realized we are on a very, very beautiful, strong, okay, sell area on the weekly. So on the daily, when you come back to the daily time frame, I'm dropping it right here. Okay, so when we come back to the daily time frame, you'll see and observe that we have a very great head and shoulder. This is our shoulder, this is our head here, and this is our shoulder. Okay, now after this head and shoulder happened, the market is trying to print, if not the exact same thing, uh close to the exact same thing. Okay, shoulder here, okay, head, then we had our second shoulder, and that is what gave us this beautiful rally, as you can see. So let me just pull this out so that we may keep it clean. So what we are observing is that we are having great reactions from this price area. Okay, it's a valued area. You can see the cells that are coming in here are falling for days. Okay, so what happens when the market, when you drop down to the H4, let's just do the H4 quickly. I'll just remove this trend line. It was here to give me some insights, more insights on what to expect from the market. So quickly onto this one. So we took our cells here after we broke structure. So I realized that we had this double, almost a double top break of structure. You can see how my stop loss, how big my stop loss is. But all the same, it still gives me a 1:2. Yeah, and the money holders, the money makers are the money holders. Okay, and that is the rule in the beautiful game of the markets. So we got tagged in here. The market played, as you can see. You really have to be patient in this one. Yeah, we made a very beautiful sell here, and I knew we are in for it. Then got in for drawdowns. Added some entries somewhere around here, which was risky, but I kept it small. Then you can see the beautiful rally that happened yesterday. The market literally missed us by a hair to hitting our TP. Then again pulled back, and we had the drop and made our manual exit somewhere around here. Sometimes you have to actively manage your trades, because I don't see the essence of you holding the market. You've held the market to this point, then you've literally been missed by a hair. Then the market rallies again to your entry. It doesn't really make sense because of a few bucks, maybe 10, 20, $30. Okay, it really doesn't make sense. So this is the USDCHF entry. I think it should be here. Yeah. This is it. The USHF entry. You can see where we took the trade. Okay, and currently right now is below. It's below here. Okay, so that is it. You keep it short and sweet, simple as is, and I think that is what this is where we are right now. Okay. So that is my approach for the market. We also had a trade on the GBP hours, if I'm not wrong, because I trade the GBP hours as well. And this will happen to be my last or whatever that I'll show you guys. So the GBP hours, we kept it as simple as just as we are explaining. The markets are not hard to uncode or decode. So we are coming from this beautiful above we sell, I mean above we buy. You can see the reactions. Above we had a very small daily buy. This is a candle of a daily. Yeah, below we sold, above we buy, below we sold. And right here you can see that people were trapped. People took sells expecting the market to behave just as it did here. Okay, and that it failed and impulsed, all heading for their liquidities and whatnot. Then we knew that we were supposed to get a pullback to this particular area. It is very, very beautiful. We expected a pullback to this area so that we make the rally, but it never happened. So you can see how for how long we had to wait for this market to come back. You can see all this data here. Okay, we had to wait for all this data. Remember, we're on the daily time frame. It is a month plus, if I'm not wrong. Okay, and you can remember from the previous video we took these cells. So right now we are currently in these buys, and we don't really expect them to move so much. So when you drop to the 4-hour time frame, this is where we took our trade. It's been stubborn as hell. It's been very, very stubborn. Okay, so but we are here to hold the markets. We are here to, because we know the money makers are the money holders. Okay, so you can see the tap. Now I saw these reactions. I didn't take the trades immediately, and after I saw this reaction, I realized that buyers are here. This is where the buyers are. So I placed my trade orders here, tagged in, and currently you can see that we are moving smoothly. This will give me a 2.32 or 2.3 risk reward ratio, 1:2. That is enough for me. One or two trades of this kind are enough to make a living, a weekly living, and so on and so forth. So that is what we have for now. We are expecting the market to beautify this rally to the last point of it, somewhere around here. Then probably play around. If we are supposed to break, then break in and continue. But for now, I'm expecting GBP to do a good drop below to as we are targeting this trend line. Okay, let me just do that quickly. I can see my time is quite high, moving high. Okay, so you can see that this trend line is so beautiful, and upon the touch of this trend line, waiting for our confirmation, we will take swing trades. Okay, we will take a 1:4 trade, probably target somewhere around here or somewhere around here for the 1:3. Then we book half, then I wait for the next rally. So that is what we have currently for now. Keep it $1 million pips. Kindly be sure to subscribe, share the video, and leave us a comment of what you want us to improve on. Thank you so much. Let's keep it $1 million pips. God bless.